I want to start off tonight by showing something, a mistake that I made. I don't even call it a mistake, just lack of discipline that I used on last week. Hold on a second. Let me get it together for you. And I want to show this as an example of what we have to look out for and have to be diligent for. A lot of times people prepare for the losing side of trading, but they don't quite prepare for the winning side, because it's all about emotion management. Okay, it's all about that emotion management. I'm gonna show you right here. All right. To make sure y'all can see this. Y'all can see that, put a 7 in the chat for me, please. Want to make sure you can see that. Awesome, awesome. Thank you. So this right here, I'm going to highlight this area right here so you can see it. This is, let me get the highlighter tool up. This was Thursday going into Friday. Okay. Now these boxes all shifted here, and this looks like the sell zone, but this is not how it looked. Okay. EuroCAD was such a sweet setup. I mean, a sweet setup, guys. And I had gotten in on the 5-minute. I felt very good about it. I had a reasonably good trading week. And I said, look, I told myself, and I think one of my friends I trade with, I said, yeah, EuroCAD's going to pay me today, because it had been just consolidating. If anybody was in it, you know what I'm talking about. It was just consolidating, doing all this stuff, with tease you to come back, tease you to come back. And so what I was doing, I stacked. It wasn't a lot. I did maybe 5 cents, 15 cents. Then I did a 20 cent. I had a total of, when it was all said and done, I had probably a total of probably about 60 cents in individual trades, 4 to 5 of them that stacked up. I was like, when this thing pops, it's really going to pay me. It's really going to pay me. And it went in a good profit. I'd say probably 8:30ish, New York market open. It's right here. Matter of fact, I can look exactly when it started moving. Yeah, so I mean, it really got to moving, guys. I mean, and I was up 300 some odd dollars. And I just knew, man, like, man, because I had stacked and put all these various positions in. It's like, yeah, this is gonna be $1,000 day. I like, one of my other accounts I had did awesome, man. And it started going, and then when right here, probably, yeah, so it's 15, about 1,600 hours. That's about 9 o'clock, 9:30. This right here, I expected this pullback right here because it was right before the New York Stock Exchange opened. So yes, this typical pullback. But as you can see, what it kept doing, I saw my profit go down. I said, I'm not worried about it. It's coming back. I didn't even put my stop losses into profit. It's going to turn around. I mean, this thing has been consolidating for days. Y'all see the consolidation. I mean, this was all week. This thing consolidated all day, 22nd, 23rd, going into 24. Then it got down to where instead of being 300 up, I was about 180 up. So man, it's going to turn around any minute. It's about to hit bottom, because I know what the market usually does. It does this push, and then it turns around, and then it goes up. Made sure with no major news going on, kept going out. Now all of a sudden I'm like $80 up. I still did not close any positions. It's gonna turn around because I've been this low already. When it was consolidating, I would go like 60 up, I'd be 20 up, I'd be 15 up. So I'm not scared of that. Guys, I ended up closing that trade. The other part was I was mobile. I could not look at any of this. Okay. I got busy. I was at maybe at the barbershop or something like that. I was doing something. And I ended up looking. I said, let me see how this trade. I said, I know this thing is back in profit now. I was $178 down. I went from $300 up to $178 down because of my arrogance. I'll be the first one to admit it. Because of my arrogance, that, you know what, I've had a good week. I've been on a good roll. I was high on my own supply. You know, I was cocky to the point where I was so hell bent on this market is going to pay me that I did not take what it paid me. And so I had an almost $400 swing from, well, it was a $400 swing, almost $500 swing from being 300 up to $178 loss, guys. Okay, because I was mobile and I didn't have my notifications on. I did everything wrong. You would think I did everything right to catch it, but I did everything wrong in my mismanagement of it. Okay. And I'm starting this session off by telling you guys a mistake that I made. And it wasn't a mistake in my trading. It was a mistake in my emotional management. A lot of times we want to just talk about emotional management. We talk about, oh, you know, don't beat yourself up about too much about a loss, and don't revenge trade and all that stuff. And all of that stuff is true. But you can get intoxicated with winning to the point that you're careless, that you're cocky. And the reason I'm saying that is because I see people posting, I'm talking with people individually, one-on-ones, and people are having having success for the first time that you've had in years, since you've been trading or since you've had simplicity. Okay. And so what I want to warn you guys against is still respect the rules, because here's the one thing that I should have known. One, this whole summer, it's been choppy. So the best thing to do is to take the profit in front of you, hold a little piece, see if you can get some more. If not, you're okay, because you've eaten off of that. You've had success. The second thing is, it was a Friday. Fridays and Mondays are notorious for being trap days that will lure you in with great movement and then pull back equal. Okay. But I had gotten so cocky. I had gotten so overconfident that I, basically neglected my own rules of proper management. Okay. And so I want you all to have as much success, but we're in a positive space that now we're managing success more so than managing the failure of losses. Okay. So don't be afraid. Don't be afraid, and don't take your profit early. Let it mature. Okay. I know it seems like I might be talking with a forked tongue. Last week we were talking about, letting trades mature, but you have to know what conditions are. Okay. By now, you all should be able to see and tell. You should be able to see and tell whether it's going to be a trending day or whether it's going to be a choppy day. Okay. And if it is going to be a choppy day, there is nothing you can do to make it a trending day. Okay. I have two multiple accounts that I manage, but one of them I just didn't trade out of. I didn't see anything that fit my criteria. And so I didn't need to scratch that itch today, for that. Okay. Now, the good thing about it is all the positions that I traded, none of them ever had me more than my 3% threshold at risk. Okay. So while I didn't get the almost $300 in profit, I only had a $178 loss. So I was still greatly positive for the week. But you see how, had I not still been disciplined with my with my lot size, according to stop loss, I still would have been in a much dire situation. Okay, so I just want to start off with that, guys, just to let you know that, hey, it's new, it's rarefied air, it's new air that you're breathing now. Okay, a lot of you are having success for the first time and consistent success. I even saw some things in the chat today about somebody, I can't remember who it was. Somebody say, hey, they didn't follow all the rules and it burnt them for it. Okay. You can get some hubris about yourself, right? Like, man, I got this. I'm just waiting for this. I'm waiting for these things to cross, blah, blah, blah. But you have to read all the tea leaves, guys. This trading arena is a system. Okay. And it rewards people who operate systematically. It punishes people who purport themselves erratically and emotionally. Okay, I am proof positive of it. I could have, on a Friday after I had made a great amount of pips, I could have extracted an additional 300 and rode off into the sunset for the weekend. Very happy. Okay. Instead, I had to eat a little crow, guys. I had to eat a little crow. So that's how it works sometimes. And I wanted to share with you guys in transparency. That's what happened to me. It can happen to you. And so you have to always be on guard, to manage the fear and the greed. Okay. Managing that fear and the greed. And as you can see, when this thing came, when it turned, it made a turn. So these boxes right here were not here. This was the blue box. It pushed down so radically that it became the sell box. That's how much this thing pulled back. So I'm glad I got out when I did, and I stopped hoping that it would turn, because as you can see, it definitely would have, and these arrows kind of reset. Okay, so I just want us to kind of just have some scope and some perspective on that. Okay, the other thing is I want to impress upon you guys: trust your analysis. I'm not even telling you to just trust my algorithm, but at this point, trust your analysis. At this point, we should be able to look at any pair. I won't even count it. I'm just going to drag a random one, EJ. Okay. Just off Jump Street, we know this is at least what somebody type in what this is. At the very minimum, it's this. Yep. At the very minimum. Anybody else? At the very minimum, it is a C setup. Okay. Now it may have a white one that comes up. Okay. We don't know that yet. Okay. Right. It's going counter to the daily as we speak. Right. So we have, what I want everybody to do is have to have a playbook for what you see. All right. It may be in your plan that I don't trade C setups. It's just too risky. I'll wait for at least a B. That's okay. I typically don't trade I typically don't trade C setups. so you say you traded and you lost. Right. And that's fine. But you just have to know what you're getting into, guys. Okay, you have to know. Let's just pull up another random one. Oh, sorry. Probably should choose something other than euro. Okay. All right. Would anybody want to get in this? Any takers? Would anybody want to get in this one? Right. Yeah, exactly. It's not enough information. It's not enough information It is consolidating. Even the information that it is given, in my opinion, is a little old and stale. So we stay away from this, guys. All right. We stay away from this because there are too many others. Here's another. All these arrows in the middle of trends and all that stuff. Stay away from that stuff, okay? And so by now you should begin to have your eyes trained so you can immediately tell. You can immediately tell some information. Right now, where it's going, this is just a C setup. I'm not interested in the C setup. Well, personally, myself, I'm not interested in C setup, okay? This is UJ. All right, now somebody tell me about this. Man, look at that move going up. That was beautiful. What, at the very least, what is this, guys? Exactly right. At the very least, it's a B. Now let's confirm what it is on the daily. Aha, what do we have here? The daily bias is in a sale, right? So with us knowing that, what do we have potentially? We're waiting for. Exactly. Exactly. Right. We have an A setup here. Now it may take a while to mature, but I mean, this had to be, this was Friday when the US dollar just went crazy. Okay. So this is some fundamental stuff that made this happen, not technical, because this was really going against the daily trend and it should not have. Okay. This is all fundamentals that made this go up. If y'all remember, the US dollar was very strong. Okay. This is a fundamental thing. Okay. But when this turns and resets, when this get in, I want you all to put UJ on your list. Okay. I'm not trying to tell you what to trade, but this is one that will pay you very well. Okay. This is an A setup. Why is it A setup? Because we got the daily bias, the 4-hour bias, and the daily trend all wanting to go down this way. Okay. All right. So let's pull up GU just to see what is going for good measure. Okay. Somebody tell me something about this. What do we have? It's a what setup? Y'all look at GU, just this information you see right here. What is it telling you? Yes. Right. Exactly. It's a C setup. Okay. I don't like it. I don't like it. Okay. It's indecisive. And there are just too many other good options out there, guys, to rather than having to uh, subject yourself to that. Okay. Let's look at one more and then I'll move on. Because what I want y'all to start doing, like a flashcard or something, man. Train your eyes. Okay, this is NZDJPY. Much the same way. Okay, and as you can see, when it's going against the daily bias, it's going to be choppy, y'all. I mean, it gave you a little good impulse right here, but other than that, it was garbage. It didn't give you anything else. Okay, now will it likely come down? Yes, but it's going to be a choppy road on its way down. Okay. Let's bring a CAD in here just to see what it's doing. All right. It is at least a B, correct? Okay. We'll look at go. We can do that. It is at least a B setup, right? When we see that, let's go up to the daily just to confirm. And it is actually an A setup, okay? So CAD CHF is an A setup, because it's going in the direction of daily trend and the daily bias, okay? So keep that on your radar for this week, okay? It's not ready yet, but when it is, that should be a quality trade, okay? Let's look at gold. Is that anything y'all want to be in right now? Sometimes we got to zoom the lens out, y'all. And I know gold will pay you. Gold will bless you real good. But y'all see why it's been, it's been stealing hearts. Right. It's been getting people hopes up. It's in a little bit of an uptrend, but is it really? I mean, it's just ugly. It is ugly. Right. Right. It is in between there and there. It's just in a little channel. It'll fake people out, take their money, fake them out, take their money. You can ride up there, you make a little bit. You know what I'm saying? So, there are too many things that are moving well out here, y'all, for us to fall in love and force things. Right? Okay. Let's look at AUD CAD. Okay, so I assume that the white is on top of the 4-hour right here. I think I can see it a little bit. So this is the 4-hour and the daily. They're just right on top of each other. That's usually a good sign when they come in together like that. All right. Let's look. It is a new daily. Okay, it's a new daily. So new dailies like these can be a little tricky because they haven't, just like any trend, it hasn't matured yet. But technically it is an A setup. Okay. I just would not bet the farm on it. You see that? It hasn't all the way matured yet. Look at this long engulfing candle coming down. I mean, to be honest with you, it is likely due for another touch at the bottom of this zone here, because usually it touches twice. And to be honest, it did clearly pass, but we have to look at the level of volume. It's kind of leveled off. So I'd be leery on that. Okay. It's going to be a wonderful trade eventually. I just don't know if the daily trend has matured enough yet to truly establish. And to be honest with you, it may be something going against it, such as, let's look at the weekly. It may be bearish weekly. It's not. It's just, it is. It's bearish weekly. Okay. Now see, that can make all the world of difference. It is a new fresh weekly. It is a new fresh weekly trend as well that's going bearish. Okay. So as strong as the daily can be, it has to answer the two time frames higher as well. That's the weekly and the monthly. Okay. So whenever you see a daily struggling, it's likely because it's likely because another higher time frame may be pulling back the other way. And guess what? When the weekly wants to go, the daily has no choice, which means the hour has no choice, the 4-hour and 30 and so forth. Okay. But it's rare. It's rare that they pull back to the degree that it controls the daily. But this may be an instance right here. So I'll proceed with caution, but it will eventually go. Okay. So the question, as we consider using a 200 moving average as a filter, yeah, you can't go wrong using the 200. But I want us to, I would use it. I possibly would set it up on a different template. One that you might want to do your analysis template to add extra things, but the one that we actively trade on, I'd like us to keep it as clean as possible. Okay. But yeah, you can't go wrong using 200. Okay. That usually gives a good general trend as to where you're going. Right. So that's just a little quick spot up analysis, y'all. We'll look at some other pairs. But I want us to start really focusing on getting quality trades. And that's the reason we looked at, doing this grading system, because when you get this like this is beautiful right here, y'all. Okay. This is at the very least a B, I would say, right? Hold on, let me pull it back. Hold on 1 second. Yeah, had to be because the daily flipped over here. So the daily was already established, and a B 4 hour came in with it, and just beautiful movement. Okay, so those are the ones. What I want us to start doing is like just get used to. You may not trade every day. Okay, get used to the fact that I know it's exciting because we've been finding winning trades of late and things of that nature. But the important thing is that we find highest probability, and we take those trades. And if we don't see that setup, we just don't trade. The difference between a person that casually plays baseball, that consider themselves like a weekend warrior kind of slugger, and a professional is professional batters. They wait for their pitch. They know that, my power, the power of my swing is maximized on the outer right corner. That's between my thigh, and my torso. Okay. That's my zone. And I won't swing at anything unless it's in my zone. And so that's the reason we talked about last week, you developing your trading plan so that you can find what your zone is. Okay. Is your zone, I trade from 6 a.m. to 10 a.m. on Tuesday, Wednesday, and Thursday. Those are the things I want you to start paying attention to. What is my zone? I want you to think of yourself like a major league pitcher. Where do I get my most power? What gives me the highest probability? Am I, situationally, okay? This thing with this analogy of baseball, situationally, do I need a home run, or do I do have me in a position and I just need to get somebody? I just need to hit a spot where I see weakness, where the outfielder, the center fielder is playing too deep. Do I want to hit it shallow? Okay, that may be. You know what? I just need to compound. What I should have done Friday, I should have compounded my win. Okay, I should have took those $300, added with the rest I made for the week, and I should have been done. Okay. Now, so you only lost 178. Well, I really lost $478 because I was 300 up. Okay. And so we want to make sure that we recognize what our pitch is. See, a good major league pitcher knows how to disguise his pitch that it looks like it's a fastball coming right down the middle, but he can put enough spin on it where it will sink right when it get to the plate. And what people do, they're swinging, about to throw their back out, because the illusion of what the ball was about to do. And that's what the market would do. Those are these fake outs. See this spike right here? That was just to clear people out right here before it went down. Okay. That's what the market, the algorithm, market makers, whatever you want to call it, Wizard of Oz, whoever it is, they do those things because they know the herd mentality and the emotional state that most traders are in. They will chase. They will not let the market come to them. They will not let the market dictate what it wants to do. Most traders are trying to make the market do what they want it to do. And that's what I did Friday. I said, hey, yeah, it's going to pay me. It's going to pay me. I've been waiting as if the market owed me something. This has been a very volatile summer. With all the news going on, the lack of volume. And I want to warn everybody this week. Okay. This is a special week. Okay. So the setups that you see may not manifest to come to fruition like you think they will. Can anybody tell me what's special about this week? It only happens a couple times a year. Somebody tell me that. I don't know. Hold on. Let me look at my calendar. Yes. All right. Y'all piecing it together. Let's go. We got two things. Coming. It's something else. So NFP, correct. October 1st is on Friday. So the first Friday in every month is NFP. So that's one thing. Justin, you're right. Monthly candle is closing. Somebody tell me something else. Anybody else? Going once, twice, three times. So those two things are right, y'all. Kurt, Dwayne, Justin, end of the month. So this is the end of a monthly candle coming. Okay. We always have an end of a weekly candle coming, right? We have NFP coming. All right. And the last thing is it's not a time frame that we necessarily look at, but you got to think in terms of business. Okay. Not only is the end of the week, not only is the end of the month, but it is end of the fiscal year. Okay. Most companies run from October 1 to September 30. And end of the quarter. Exactly, Dwayne. Okay. So this is a very pivotal week. Because guess what? All these bankers, the bonus that they're going to get in at Christmas is based upon what they did October through September. Okay. So you may see a setup, and I think it started last week, to be honest with you. Really be honest with you, I think it started in August. You can see a perfect setup that looks technically what it should do. Just like EuroCAD. Technically, it was time for it to go up. Trade very lightly this week. Okay. I would not go very heavy. If you're in profit, good, take your money. Okay. Because I just gave y'all 4 reasons why the market is not going to be stable. End of the week, NFP, end of the quarter, end of the fiscal year. Okay. Based upon, these people, these investment bankers and stuff, they get paid based upon the market reaching certain levels and markers. That's the reason you'll see something shoot up with no reason at all. is because the smart money wants to go there. Okay. So you can see the most beautiful setups in the world. You're like, man, I'm going to get paid off this one. And it will go the opposite way for no other reason than the market needs to get to this mark by a certain date to fulfill a certain purpose. Okay. Y'all got to realize we, retail traders, we don't move the market. We don't move the market. All right. These professional hedge funds, these insurance companies, these banks, they move the market. Okay. And they owe it to their investors to get to a certain place, to produce a certain level of income, to pay out a certain level of dividends. And they have the money to move it to those places. Okay. So I want you, but those are the kind of things I want you all to start drawing your lens back and look at what's going on in the world. What week is this? What month is this? Okay. End of the quarter hits 4 times a year. This is one of those 4 times. Okay. The last time it was June. Around June 30, it was the end of the quarter. And before that, it was March, end of the quarter. Okay. And if you notice, I want you, y'all don't believe me, look back and back test yourself. Every time at the end of the quarter, you see big candles just going places. It's because they're trying, they have to hit marks in order to do their job. Okay. Now, if you know that's going to happen, you could use that to your advantage. But that's the reason they want us looking at these small time frames. They want us all jittery and being emotional and all that stuff. But the fact of the matter is, we need to look at the market like they look at the market. Okay. And when we look at the market like they look at the market, we can stay out when they're out. We can be in when they're in, and we can just eat off of what the big sharks are doing. Okay. All right. So I want to just leave that tidbit with you all, just so you all can start looking at the market with different eyes, because every day is not the same. Every week is not the same. Every month, every quarter is not the same, and every year is not the same. Okay. Just want to make sure that we have that aspect down. Okay. So the last thing I want to share with y'all, as we are preparing, and I feel like several people are having some success, and I want to make sure you guys, stay in demo. Okay. I think last thing we were doing, we were trading as if we had $5,000, and we wanted to kind of start raising that, raising the level, still staying at 1%, but 1% of a larger thing. Okay. And there's a method to the madness as to why we're doing this. Okay. And I want to share with you guys a reason why I've been preaching what I've been preaching is to prepare us, for those that are interested. Some may not be interested, and that's fine, but I think a vast majority are, in using funded trading. Okay. Now, I'm not going to endorse any particular one. I think on my thing on YouTube, I think I got a link for one that I may do an affiliate thing, but I don't even use that one hardly anymore. Okay. But I'm not going to steer anybody towards any one particular one, but I just want to show you an example of why it's advantageous. Okay. And why I think you should consider it. And so I want us to start getting on that road. All the things we've been doing, from the risk management to how much we're risking, to how much we have exposure at one time, to taking your money that's on the table. All those things are geared towards that. I'll tell you this. I really became a better trader when I started becoming, when I decided to become a funded trade with funded funds, right? Instead of my own. I still have some that I trade on my own, but I do use funded trading. The reason I did that, because I was responsible to trade a certain way. It gave me a level of accountability. Gave me like a big brother that was kind of looking over my shoulder. Say, hey, can't put that much at risk. When I knew that I had to do that, it changed the way that I traded. I'll mention some names, but it's not endorsements. This is just fact. What I'm going to recommend everybody to do is to at least get a trial. Okay, get a trial demo account with FTMO. Okay, I'm not saying to go with them. They have a trial one that you can just get for free. You just give them your email address and they give you a free one. Okay, trade the same way that you've been trading. Okay, I know you may have a Hugo's Way demo or whatever like that, but get an FTMO one. I think you can do. I think they'll let you do 2 or 3 weeks, as if you got like a $25,000 account or a $50,000 account. What they do, they give you analytics on the back end, and every day they show you what your win percentage was. They show you what your average entry was. It shows you what your risk to reward, what your average risk to reward is. So that it's unfiltered information that is like a mirror that shows, okay, these are my behaviors. These are my behaviors on paper. Okay, and it is irrefutable. It is undeniable. And it will change the way you start looking at it. It's like getting your blood drawn before you go for a physical. Like, oh, my cholesterol is that high. Oh my goodness, my triglycerides. My resting blood sugar is this. Oh God, I got to do something. It will tell you just the naked truth about what your tendencies are. Okay, and so try, just take the challenge. I mean, and if you really get into it, you'll feel the pressure as if it's a real challenge. You really will. And I think it's of great benefit. I did probably 10 of them. And I did not trade a real funded account until I passed the bars of what it had to do 3 times in a row. I did not take a funded traded challenge until I passed it in demo 3 times in a row. Because I was like, when I got real money on the line, that's what's going to matter. Okay. So I want to show you guys. Hold on, let me pull it up. Give me 1 second, guys. Now, I'm going to show you guys an example of funded talent, okay? Only as an example of, this is one that I'm familiar with that I've used. Okay. Now, they have several other ones that you can trade, flex, where it's convoluted. I don't recommend those. I'm sorry, guys. I'm sorry. Those flex stuff, I don't, it's too complicated. But essentially, guys, it's traded in 2 phases. Okay. First phase is 30 days. Second phase is 60 days that they give you. Okay. Okay. There's 2 account sizes you can trade for. It's a 25,000. And so you have a max daily loss of $1,250. Okay. Which is essentially 5%. Okay. So what they're saying is you cannot lose more than 5% of your starting account balance in 1 day. Now, do y'all see now why I say we only risk 1%? And we only have a max of 3% at risk at one time, which means you could be in 3 separate trades and you could lose all 3 trades and you're not in danger of eclipsing your maximum daily loss. Okay, does that make sense? That's the reason we only risk 1% at a time, maximum 3% risk at one time, so that we will always be under a 2% shield of this limit. Okay, of this limit. Now, the maximum overall loss is 10%. So you can only have a maximum loss of 5% in a day, a maximum of 10% over the whole length of the challenge. Okay. So this is the same right here. Just hunt for 100,000 is 5%, 10%. So that's easy math right there. Okay. Now, here's what I like about them as opposed to some of the others. Some of the others have a 10% target. Okay. With Funding Talent, they only have an 8% target, which it is exponentially better. That's 20%. That's 20% easier than their counterparts. Okay. So you have to grow the account by 8% on the first challenge. And guess what, y'all? It gets easier. You just have to grow it by 4% in the second stage. Okay. All right. So that's the reason I'm telling you only risk 1%. But guess what? We only go for what? A minimum of 2 to 1. So we're only risking 1% to get 2%. All right. So if you get quality trades, technically all you have to do is win 4 2 to 1 trades and you've passed the first phase. Okay. And then the second phase is you have to grow the account by 4%, which literally you can find. That's what I'm saying, guys. We don't have to swing. We want to swing at every pitch. If we find the quality ones, all you have to do is find a 2 to 1 trade and you're done. Okay. And so that's the beauty of it. It actually gets easier the further you go. You pass the first phase, it gets easier. All right. And then once you do that, let me close that. Let me close that. Okay. The great thing about now, it costs $175 on this particular vendor. Costs us $775 to take the challenge. Okay. If you pass, they refund your fee. They refund it to you. So what you put $170 at stake to get access to 25,000, and they refund your 178 back. They do it so that people have skin in the game, so they take it serious. Okay. Here's the thing. Let's say you do not hit your profit target. You're profitable, but you didn't achieve your profit target. They allow you, as long as you did not violate the daily loss or the overall loss, if you're profitable by $1. Okay, I've done this before. Okay, I wasn't doing good. I made 25,000. No, I made $2. My balance was $25,002. I made $2 and they let me take the challenge over for free. I didn't have to pay again. Okay. All right. So let's look at this. Here's why it's advantageous, guys. Look at, I want you to see right here. I'm gonna enlarge that right here. So all trades will be closed at your time you make a withdrawal. Request remain until the elite. Once you pass, you qualify for an elite account. Okay. Say we will provide a 90% payout for the first 10% of your profit generated on the elite account and 80% payout thereafter. Okay. So what does that mean? Let's say with your $25,000 account, you create $10,000 of profit. Okay. You literally get 9,000 for the first 10%. You get 90% of that first amount. Okay. After that, first 10% generated. Okay. You get 90% of that. After that, they pay you at a rate of 80% payout. Okay. So it's literally none of your money is at risk. The only money you risk was the 175 to get qualified for the challenge, to which you get back once you pass the challenge. Okay. And then after that, it's like you're just trading on commission. Okay. Now, I know for certain personal, they pay, they give a 1099 as if you're an independent contractor at the end of the year. Okay. Which is rightfully so, because it wasn't your money at risk. It was their money at risk. Okay. And so they literally, you get paid as a, now you still have to handle your own taxes. I personally, of the 80% or 90% they pay me, I take 30% off and I put it in the bank somewhere. I don't touch that. That's Uncle Sam's, right? That is Uncle Sam. That's what I do personally. But as you can see, it can be a very lucrative, it is a way, because a lot of people, they trade great. Man, I got 150 pips. Man, I got 200 pips. But yeah, like, but your account is only $750. So you're only able to take a 5-cent lot. Okay. So this is a way for those that are interested. And this is what has, has worked for me. It allows people to create income. Now, my ultimate goal is to not need them. I want to amass such a large fund to where I can be my own fund and keep 100% of whatever I win. But this is a great way to create income. Is a great way to replace your income, or whatever you like to do. Okay. And I wholeheartedly recommend it. How do they make their money? I personally think I don't know this to be a fact, but I personally think that they are trading with a bunch of wealthy people's money and tell them, hey, we'll give you 3% growth. They're letting us, the traders, having 80 to 90%, and they're keeping probably about 5% in the middle. They're doing it exponentially for all these people, and that's real money. The other part is they're making money on people failing challenges. Okay. I think to get the 100,000, I think it's like $600 to take it. Okay. That's a lot of money to get, to put at risk, but look at the access it gives you. And you can have up to 3 accounts. So I can have 3 25,000 accounts. I can have a 100,000 and 2 25s. I can have 3 100,000. You can stack them up together and you can trade them all together. Okay. So this is an amazing, amazing opportunity, as I see it, for us to exponentially grow. But personally, my plan is to amass enough capital to where I don't need to use them. And that's a great way to build your capital up so that you can be your own fund. Okay. And so this is just one of them. They also do this. They have a scaling plan. Said if you're consistently profitable for three straight months, you must trade at least for 3 months. You must be profitable 2 out of those 3 months. You must have a minimum of 3% growth. And if you do, they will increase your account balance by 25%. Okay. So if you've got $100,000 account, they're going to increase it by 25,000, give you 125 to trade with. So they reward consistency. They reward you being consistently profitable. That's what I mean by we don't have to be home run hitters. We just got to get on base. Got to get singles and doubles and steadily compound and build that wealth. Okay. So I just want to kind of go over that and kind of explain y'all a little method behind the madness as to why I've been so hard nosed on, hey guys, stay at 1%, because I'm trying to get your mind trained. I think it's healthy to do anyway, but I think if we traded 3% trades all the time, you'd be at risk of violating all the time. Okay. So that's when we go with small risk, small stop loss, which will allow us still to maximize our lot size. Then we can maximize our profit that way. Okay. But what people normally do is they go large lot size, no stop loss, or a larger stop loss to be comfortable. And that's how people get to blowing accounts. because you can't have it both ways. You can't go large on your lot size and have a huge stop loss. It just doesn't work. It exponentially compounds the other way. So far as trade. Okay. So any questions that anybody has, that's our objective. What I want us to start doing is getting some FTMO kind of trial accounts. Let's start practicing on that. If some of us want to start going through some challenges together, I would love for us to go through 30 days of doing some challenges together. Okay. I see people start, and somebody did that was great. I think it was Javon. I think Javon say, hey, these are some A setups I see, guys. Let's do that for the community, guys. Okay. I think you all are your eyes are starting to get trained good, and y'all see it. How we all know we're independent traders. Nobody's anybody's financial advisor. But I think if we're all seeing the same thing, say, hey guys, we can be kind of a net and a filter for each other. I think that's good. But I probably will start doing another challenge pretty soon, and would like for some of us to kind of trade together. And let's start a challenge together and see how we're doing. Encourage each other, and I want us to celebrate the victories. When somebody passes phase one, celebrate with each other. Past phase two, let's celebrate, because I think that's a good thing, and I think we can have that good healthy competition, healthy encouragement with each other. Okay. Anybody have any questions? I see one's already. I know Mr. David had sent some earlier today, and I'll get to those. Anybody have any questions? Yeah, thanks, John. That was really big. So when will Gazelle be ready to be less difficult? You know what? I did get notification from one of my developers that they have solved the issue with working with Hugo's Way. I just haven't had a chance to test it. But I will check it out, and we'll get with you all. Speaking of that, how did you all like the true trend thing? Is that something that, I know it didn't work on Hugo's Way? We already knew that, but did anybody have any other issues or problems? Did it help you kind of establish and see what the trend was and give you confidence? That was my whole notion behind it. Any thoughts on that? Well, no news is good news. I'll take it like that. All right. So let me get to Mr. David's question he had. And if y'all want to type in, if anybody raise your hand if you want to ask any, okay? I know some people are shy and would rather type it. So let me get to Mr. So Mr. David said, what are my top 4 favorite pairs? Trade 415 and why? Okay. What are my top 4 pairs? Trade 415 and why? I would say, Euro AUD, because it flows. Euro AUD and Euro NZD, they tend to flow consistent. They're not very choppy. They don't pay a lot, but they move very well. Of late, I've fallen in love with UCAD. UCAD of late has just, really been paying well. And when it wants to act right, I like gold. When it wants to act right. Right now, it's not acting right. So I would replace gold right now with it's not acting right now either, but I like GU. I like GU. I like Euro AUD. I like Euro NZD. and I like gold. But and I don't like to be too heavily against the U.S. dollar, but those are the ones I like, and I like those particularly because they flow. They have good ADR. Uh, they have good ADR, so you're not gonna get stuck in them. But you know they can't have their issues. Okay. Uh, you had some issue with where to put the stop loss. Yeah, with the ones that no, see that's the caveat that comes with pairs that have high ADR. When it has high ADR, you have to be mindful of their volatility, because the same reason people love the volatility is the same reason it can be really sporadic. Okay, but I believe when we wait for our setup where it truly breaks out, usually there's more flow. Okay, but it will go into consolidation rather quick. Okay, so those are my four pairs and why I like them and prefer them. Okay, I think you had one more question, Mr. David. Oh, it was about the dollar. Okay, some advice regarding gold. Um, Gold is, you don't have to stay in it very long. Okay. Um, what people need to realize is that gold trades from a pip payout slash how it pays in pips. It pays just like GU and EU. Okay, which means if you put a 10-cent lot in, it'll pay $1 a pip. Okay, if you put 0.5, 0.05, it's gonna pay 50 cents a pip. Okay. The problem is the ADR of gold is in the 20s of thousands, whereas GU may move 100 and 80 to 100 pips a day. This thing moves 23,000, 24,000 pips a day. So it's highly volatile. It moves very fast. So what one of the persons that I learned from always said, when you're trading gold, use 1 cent, 1 cent, not 10 cent, not 0.10, 0.01. Use 1 cent per $1,000 that you have in your account that you want to risk. Okay. Because it moves that fast. Okay. It literally moves that fast, y'all. Okay. I have put like a 5 cent 0.05 in, let it run all night and make $400. Okay. So it's nothing for gold to move 200 pips, 300 pips. When it like, and those are literal pips, it moves. So that's the reason people like to trade it, because they want to put $1 on it. That thing moves 300 pips. That's $3,000 like that, right? So it can pay you, but it can also, boy, can it take some money from you quick. Okay. So rule of thumb, if you're going to trade gold, I would recommend 1 cent per $1,000 that you have in your account that you want to put at risk. Okay. Yes, hurt your ego, your pride, everything. Okay. Just study it. It's and because of its volatility, it'll go back 100 pips like that. Okay, but if you got a 1 cent in, it's just 10 cent a pip. Well, 10 cent times 100 moves back. It's $10. Okay, but when it wants to move. Oh, it pay. Nothing else pays like it, except for maybe US 30. Well, US 30 hits your level of risk, not is it leverage. It hits your leverage so much harder. Okay. So somebody asked what do you think. Oh, you're welcome. You're welcome. The Evergrande case, impact on the market. That's what the Chinese land magnates defaulting on some of the land. In some ways, I think it's a precursor of the over bloated nature of the world market. Y'all got to understand, even in the US, y'all, we've been in a bull market for 12 years plus. Something has to breathe. Nothing goes straight up. And since I think the Obama administration, it's been going straight up. You take a little breathers, but I mean, if y'all look at a monthly chart of the of DYX, the US dollar index, or NASDAQ, like before the last 6 years, it took 8 to 10 years before NASDAQ and US 30 would hit all-time highs. That would be like a once in a decade event. This thing is hitting new highs every, it's hitting new highs multiple times a year. This just can't sustain itself. So some of that I do think is fundamental things of the over bloated nature of the market. Some of it is people are using news as an excuse to do what they want to do to drive the money down to discount levels where they can buy. I think the truth is somewhere in the middle, my opinion. But the only thing we can do, guys, because I don't know of any other market. I've traded commodities. I've traded stocks. I've got self-directed IRA. I've done bonds and all that stuff. There's still not a market like the Forex market that gives the little guy as much opportunity to profit. I really believe that. I love trading futures. That's what I started trading at. I love trading futures, but it just costs too much. Or it forced you to be a day trader, because for you to hold a position overnight trading futures, you had to have tens of thousands of dollars. They made it for rich men. It's not made for the little guy. Forex is made Forex right now, and this we need to take advantage of it, because once they find out, more people find out about it, they're going to start putting regulations in where it probably won't let us do this. So we have to get while the getting is good. That's my opinion. All right, so question. Will both funny, is there 90 for fourth question? Do you okay, great question. So they give you up to 30 days on the first phase and up to 60 days on the second one. Okay. Last time I passed the first phase in 1 week. I think 4 days of that week, as a matter of fact. Okay. When I did that, I didn't have to wait. They let me go ahead, and I emailed them, say, hey, I passed first phase. Here's my proof. They gave me credentials for the second phase. Second phase, they give you 60 days. And you think, oh man, I'll blow through that 60 days. Let me tell you, you start feeling the pressure. You only have 1,000, you only have 4% to grow it by. But the closer you get to that goal, your palms are sweaty, your decisions are this, you're taking money early when it should have ran, you're holding things longer than it should have. It is a psychological test. It is a psychological test. But yeah, to answer your question, you don't have to wait the full 90 days. They just give you up to 90 days to do it. Anybody else have anything? Anybody else? Any ones? Okay, guys. I know tonight was a little more general in nature. And I hope it was some good information for you to consider. Still back testing. Okay, great. Question on trend. Okay, who had a question on trend? Question on trend. Do you do the trend by looking at the daily? Now, by trend, I look for the daily trend. Okay. Here's what I'll do a lot of times, and I'll show you guys this. I want to go back. And I'm thinking about eventually creating something like this, but like in this instance here, you can clearly see right here, right? That this was a now you had to wait for a couple of iterations to happen, right? But you can clearly see that this was a downtrend, right? Change this to yellow. Let me change the thickness. Take it off of gray. All right. You could clearly see this was a downtrend, okay? And so that this is a good physical reminder, okay? This is a good physical reminder that, you know, we've got all these fancy indicators and all this stuff, but I want y'all to understand, a lot of these indicators are just simply reading simple stuff like trend lines, okay? I'm gonna zoom out just a little bit so you can, now this is the same daily trend line, okay? All right. Right here, once it broke this trend line right here, it came back and retest. You see how it came and retested here? This trend was officially broken. All right. Now, it may be toying around with it right now, but this trend line was officially broken. So when you're asking Mr. David about how do I establish the real trend, you can look at simplicity to see what the overall trend is doing. But that's if you want to trade that way. Some people don't base it off of the daily. Some people base it off of the 4 hour. Like this system is mainly based on the 4 hour. There is nothing wrong with doing that as well. You need to find whatever, like right here would be the trend. If I'm trading, let's say a 415, I know right here that if I'm trading this 4 hour, let's say I'm trading this, I know to stay in this trade as long as it's respecting this line. And it's not perfect, but okay. Now, the minute it breaks this line, okay. So that's a lot of people will trade. They'll have this up here, and they'll look for. Let me zoom in right here. They'll look for it to engage this trend line, and when they see it reject off this candle, I've known people trade like this. They will jump in on this candle because this engulfing candle here engulfed that, and so that's a signal of further strength going down. And as you can see, it did go down, right? It went down and went a healthy 60 pips. based upon that rejection of that trend line. Okay. So you could also draw one down here underneath the bottom. You know, you could bring that same trend line and it creates a channel. So you have it on top and you have it on the bottom. Some people just trade like that. That's trading structure and price action. It's nothing wrong with trading it. Okay. So I'm a believer in indicators, and I'm a believer in price action as well. Okay. So you can do it by the day. It depends on which time frame you want to base it on. You want to do your trend lines based on the daily, then trading the 4 hour, trading the hour would be great. If you want lower time frames, I would say do it off the hour or the 4 hour, and then you can trade based off of the 15 when it hits 1 hour trend line. Okay. But you'll find that a lot of the trend lines will also coincide with the levels of structure that we use on the pivot indicator. Okay. They will intersect trend line and it'll do like that. And where they usually kind of X at, that's usually where price respects and it bounces off. Okay. So that's a great thing to do sometimes. Take all the indicators off and just put a trend line up and see what it respects. You'll find when you start taking indicators off, you'll find you can start reading price action, because your eyes will start getting trained for, oh, these are the levels it goes to. These are levels that it respects. Okay. Hope that answers your question. Anybody else? Awesome. Release that. What, like I said, it all depends on, they told me that this thing is ready to be on Hugo's Way. If that is good, I'm going to be testing it out tonight and tomorrow. If that's the case, then I can start giving a more concrete date on it. Okay. But I don't want to put anything out that is going to cause people headaches and all that stuff back. I want to make sure it's right. Want to measure twice and cut once. Okay. Well, thank you all so much. Again, those of you that have not scheduled any one-on-ones, y'all please schedule with me. I'm here as a resource. I want to make sure you all are getting on the path that you want to do, or things that we could not address here in a public setting that you may have privately. Okay. You all have a blessed night, and y'all look out. We've got some good setups out there, and just like I said, just realize what kind of week we're trading in, and just trade accordingly. Okay. You guys have a great night. You all take care. You're welcome. Y'all take care.